Welcome back, everybody, to another episode of Real Estate Broadcast. I am your host, Brad Gandell, and I am a realtor at Century 21 Everest. Been on a little hiatus the past few weeks. The goal is to try and come out with a new episode every other week, but the month of November was pretty, what's the word I want to use? Not a fun one. We had the tragedy at the Borderline bar and grill, and then immediately right afterwards the fires, and then Thanksgiving a couple weeks ago. What I want to start out by saying, though, is for the recent tragic events that happened, there are ways that people could help. With the shootings, there have been a lot of events and fundraisers to help the victims, and that's what I love so much about this community. We're so small and tight-knit. I personally did not know of anybody who was there or who was involved, but I know someone who knows someone. And I can guarantee you almost everybody from where we're from either knew somebody or knew somebody who knew somebody. So I'm not asking for people to help, but if you'd like to help, there's, like I said, tons of fundraisers and events that have been going on to help the victims. I actually called not American Red Cross, there was another one for a blood drive that they were doing that day to make an appointment, and they were booked out. And so I actually booked an appointment to go give blood this weekend. And what they were telling me is after they give the blood for those victims, they're going to be short anyways. So I'm doing my part by giving blood this weekend. I did it for the first time earlier this year, and I loved it. Makes me feel pretty good. So to actually be able to try and give back, that's what I'm trying to do as far as that goes. And then for the fire victims, our MLS actually just came up with a tab where only the realtors, my board of realtors, can see it. If an agent has a short-term rental or lease available for fire victims, they advertise it in there. So it's not like it's public for everybody. They can see it on Zillow, Realtor.com, Trulia, anything like that. So if you know of anybody who's looking for a short-term rental that was affected by the fires, lost their home, anything like that, have them call me. This is, again, the least that I could do to help somebody try and put their lives back together. There's also been other charity events and everything like that for the victims, but there are so many people displaced by the fires. This is, again, the least I can do on my end to be able to help somebody. So I wanted to start off the episode by talking a little bit about that. So having said that, today I am with Mark and Darci Richardson of CSMC Mortgage. Welcome.
Thanks for having us, Brad. We appreciate it.
Yeah, thank you guys for being here. It's actually timing-wise, as far as having you two on, works perfectly because there's been a lot of changes.
Lots of changes.
In the past couple weeks.
Yep.
And there are more possible changes coming up in the next few weeks.
Mm-hmm. Definitely.
So, how long have you guys been in the mortgage business for?
We've been doing this, I've been in the real estate business for 25 years. Sold real estate for a few of those and then got into lending 20 years ago thanks to my wife and business partner, Darci.
Wow.
Yeah.
Why the change then?
Darci called me one day and said, "Hey, would you like to do loans with me?"
Oh, that's a good answer.
Pretty simple. I wasn't so astute that I knew it was going to be a wonderful market, but it was a great decision. We get to work together.
So you've been doing loans.
I've been doing loans for 23 years now.
I didn't know that.
Yeah.
I had no idea.
23 years, and sold real estate before that. And then Mark was giving me his business, his buyers and that, and we were dating, and then decided to get together and become a team and get married. And
Darci started in title too. She was a
title rep in 1985.
Don't say anything.
Okay, we're not going to say that age. Can we block that out?
My math, I can't comprehend the math.
Don't
right
do that.
there.
We
It
don't
was
want to.
before I was born.
That's
so
funny. That's funny.
Man.
actually, I'm gonna have an episode in the future. I'm gonna have actually ask Brian to come on. He's like, don't have me. Ask Megan. He doesn't know anything about titles. So because I told him about this one too. He's like, all right.
That's funny.
But we'll come on. So that's funny. Did not know that though.
Yeah.
That's
Long
actually
time.
pretty awesome.
Yeah.
Okay, so one of the few things I do want to talk about is currently actually what are interest rates right now today?
Right this second. You know how it is, Brad. I mean, rates vary from hour to hour sometimes. The bond market fluctuates like crazy. And from loan to loan, whether they're putting 10% down or 20% down, a condo or a single family, what their FICOs are. But a good range of interest rates is anywhere between 4.625 to 4.75, maybe up to 5 1/8, 5 1/4. Again, depending on their qualifications, depending on the property. So much affects rates. Even this morning, the bond market opened up so much better, and bonds is what affects interest rates. That's a way longer discussion than we have time for. But
real quick,
the
way bonds work for people that are listening,
sure,
the higher the bonds are selling, the lower the interest rates. The lower the bonds are selling, the higher their interest rate.
Exactly right. They're inverse. And what happened is even something like there was a Chinese executive that got arrested in Canada yesterday by the U.S. The Canadians arrested this person. That's going to affect the Chinese-U.S. Trade problems we're having right now. There was a truce. So
the stock market right there, too.
So it's called a flight to quality. So the investors jump out of the stock market and buy bonds. When they buy bonds, interest rates get better. So as things change around the world overnight, interest rates change all the time. So what I do for my clients is watch the bond market all day, every day, because that affects their interest rate.
Pretty much just have a separate tab up on
I have a separate screen on my desk that all it is the bond market. I had a client yesterday where we're going to lock his loan. He said, "Do you think we should lock?" I anticipated some changes with what happened in stocks on Monday. They were closed yesterday because of the Bush's funeral. But I told him to hold off, and there we go. Rates got better this morning. So,
that's awesome.
Yeah.
So it's like playing roulette, basically.
Sometimes it is, but I never lose a rate for a client. If I guarantee him a number, it's going to be that number. I'm the one that pays the price.
That's awesome.
Yeah.
That's awesome.
Yeah.
So with the rates being around what you said, anywhere from 4.65 up to about 5 1/8, 5 1/4. The big thing that we've had going on this year is the feds, the federal government, wanting to raise interest rates. And they've done it. They've raised them a quarter of a point every quarter. We're in the final month of the fourth quarter. They're supposed to be meeting.
Yep.
From your guys' professional opinion, I've heard both sides. They are and they aren't.
Right.
What do you guys see happening with that interest rate hike?
As you said, they do it quite a few times. It's 8 times over the years what they do. The anticipation, and it's 50-50 right now by all the experts, whoever they might be. All the experts are telling us, all of them. Half of them are saying they're going to increase. Half of them are saying they're not going to increase. I think a lot of, and that's on December 19th. I think a lot of it depends on what happens between now and then. There was a jobs report this morning that came out lower than expectations. That's another thing that helped the interest rates get better, because as there's less jobs, there's a concern. And normally this time of year there's more jobs because there's temporary jobs for Christmas and so on and so forth, but there was less reported by ADP. And with that, there's a concern of maybe the economy is slowing a little bit. Another thing that helps interest rates. Again, a flight to quality, they get out of stocks and get into bonds. But even if they do increase, because the last increase was September 26th, they increased by a quarter. They skipped it in November, but the one on September 26th, they did the increase, and bonds didn't change at all that day. Rates and mortgage rates didn't change, because that 0.25% interest rate isn't a change to mortgages. It's a change to the overnight rate the banks charge other banks. Okay. How that affects mortgages is the reason they did that change, not the actual change. And then the verbiage that the Federal Reserve tells us in the meeting. Why did they do the change? Is there a interest rate concern? Is there a recession concern? Is there an inflation concern? And with those reasons is what affects mortgages. So again, September 26th, there was a change. Nothing happened immediately, but on October 3rd, the bond market tanked and interest rates went up.
Yeah.
That was affected by something completely different. Then they skipped the meeting November 26th. I think it was November 26th. They skipped that. They didn't skip the meeting, but they didn't do a price change November. And then since then, rates have been getting better ever since. From that day.
Better as in coming back down?
Yes, when I say better, yeah, rates have been coming back down since November 26th when they didn't do a rate change. So that being said, you could go back historically. Sometimes the rates get worse after a change. Sometimes the rates get better after a change. There's always a knee-jerk reaction that day or the next day, some sort of knee-jerk, like, oh. But normally it's built into the market. So the experts know what's coming up. Now, if the another jobs report comes out tomorrow, if that's just as bad as the one that came out today, rates could get even better tomorrow. So there's so much changes it, Brad. So much affects it. But my thought, I do think they're going to raise it in the next meeting on the 19th.
You do?
I do.
So
Yeah.
the thing that I wouldn't say makes me nervous, but I ran the numbers for CME. I haven't done November yet. I like to give it a few days, in case agents don't report their November closings. We have agents who do that. We're already 8 days into December.
Right. Really?
Report your November 15th closing already. Come on now.
Well,
Anyways,
yeah.
not going to dog too much on that. But I haven't ran the numbers for November. October for CME, the median closed sale was actually the third highest we've had this year.
Wow.
It's pretty interesting.
Uh-huh.
But the way you got to think about it, okay, we're going to say on average 30-day escrow. So they open in September. At the time, the average days on market for that was 50.
Okay.
So that means 30 days in escrow, probably about 20 days. So that means they probably had it up either first part of September into August, maybe even July, because again, that was just the average. So prices have gone up, and they're still going up. So we're not going to see if any prices are coming down, because the market's really softened as far as buyers and sellers go. We're not going to see those numbers really show until now, November, December, into the first part of the next year.
Right.
But what's concerning for me is if they do keep raising the rates, are prices going to keep going up?
Right.
Or are they going to come back down?
Right.
And I understand in a healthy market, which I've never seen. I've only seen up since I've been in this. This thing for me with listings sitting on the market for 30 plus days is really weird. I don't understand it. It's a completely new ball game for me, but I'm adjusting. It's part of it. Everybody has to adjust to how the market is. But man, these prices, if they keep going up with the rates, something's got to give.
So, exactly right.
Something's got to give soon.
Because right now, the median income in Ventura County can't afford the median priced home.
I want to say it was about 617 was the median price in October.
Oh, was it?
611, 617.
Yeah, the report that you saw yesterday, 660, I think.
660.
Oh, for Ventura County.
Yeah,
for Ventura,
okay, yeah.
for all of Ventura County. And
Yeah, because the
lower.
611, 617, they look the exact same. Was for CME.
For CME.
was it?
And that makes sense
This is
because
Thousand Oaks,
CME,
Ventura.
if you're including
Yeah.
those places, CME being
Yeah.
probably the most affordable areas for Ventura County.
It definitely is.
So we'll see what happens with that, but you do think the feds are going to
I think they're going to raise it, but it doesn't necessarily mean that interest
It'll
rates on
actually
the
go
mortgages
up.
will actually go up. Depends on what's going on in the economy. It will affect it, no question. And the experts, the same experts, are saying that rates, the average rate for next year is going to be 5.1 for 2019. This year it's 4.6 because we started the year in the low fours. Now we're in the high fours. So this year was 4.6. This year, next year is 5.1. Half a point higher, but still, historically, still an amazing interest rate.
Yeah. You were
Amazing.
telling me when I got in this, the first place you bought, I said, I got it for dirt cheap, but my interest rate was nearly 20%.
Yeah, exactly right. It's like buying a house on a bad credit card, right?
We used to think 8
So your
and a half
payments-
was great.
Yeah, and then it rolled to 13. We thought 13's amazing. 8, we'll never hit
8.5,
7.
yeah,
7,
perfect.
6, and then
it was awesome.
Yeah,
And then
threes.
when I started, it was low threes.
Yeah.
And that's the lowest it's been for us in 20-something years.
Forever.
And I've talked to
Yeah.
people. Actually, one gentleman called me the other day. We've been back and forth because he sees my stuff on Instagram. And he's like, I want to move out to CME from Long Beach. Could get a little more bang for the buck. And he's got a huge RV and toys, so wants a bigger piece of land.
Right.
But he's like, my interest rate out here is 3%.
Right.
Like,
Right.
That's the one thing that's holding me back is how dirt cheap I'm paying for my house. I'm like, yep, you're not getting that every day.
You're not gonna even touch
Might as
that.
well just not even sell the place. Just
No.
keep it for the
Yeah.
duration
You don't
of the
want to
loan.
lose that rate. Exactly right.
Let me ask you this then. Over that year, raising it almost a full point, that's obviously made a huge impact on people. When buyers hear there's a rate increase, they get scared, they get nervous.
Sure.
Understandably.
Uh-huh.
In your guys' opinion, a quarter of a point, how much does that really increase someone's payment?
Oh, wow. Obviously, it depends on the loan amount, but
Of
you're
course.
looking, I mean, it's minimal. $20, $25,
So it's nothing
$30.
over the top crazy when
No.
you hear. Because
No.
when people hear, and I do try to explain that too, and I always tell them, call your lender. That's the best one to give you those numbers and the
Right.
answers. But I tell them literally, quarter of a point, you're not looking anywhere more than $50. Depends on the qualifications. It's the same thing with price. If you go up, the general rule of thumb, if you go up like 10 grand in price, it's about $20 or so. And I tell them, hey, that's a pizza a month. Don't order it, or I'll buy you a
Or
pizza
a couple
every
of
month.
Starbucks. If you
right.
think about it, what do you pay for a Starbucks
I picked
coffee?
up a coffee bean this morning. It's $3.60.
Right?
Yeah. Do that
Yeah.
once a week. That's your
And
the
that
difference
stuff,
in your
I'm
interest rate.
addicted to that stuff. Oh my goodness, I'm having more than 6 of those a month. So there you go.
So there you go. That's your and look at all the different programs that are available now for buyers. It's not your normal 10% down, 20% down. You have 3% down. You have 0 down. Not only for veterans, but first-time buyers if they fit in the qualifications. So there's a lot of programs for them.
Well, I'm actually glad you brought that up, Darcy. So what are some of the better programs. Obviously, there's a lot. And you guys, what's nice too is you are a actual broker, so you don't have just like a Wells Fargo, for example. They only use Wells Fargo's programs.
It's a small box of loans.
Exactly. Chase Bank only uses Chase Bank programs. U.S. Bank only U.S. Bank programs. You, as a broker, you have access to Fannie and Freddie.
Sure.
You have a private investor, and occasionally, from my understanding, you guys also have access to some of those Wells Fargo programs, those Chase programs.
Absolutely have
US Bank
access to those
programs.
exact programs. Yeah.
So, what are some of the best programs out there for? I don't know, I guess maybe a first-time buyer, someone who's on the fence. They're saying, you know what, we have money, don't know how much to put down. This is what we want to keep our payment in. What is out there for someone to kind of get them over the hill to say, you know what, we could do this. Let's do it.
Right. There's a lot of programs that they call first-time homebuyer programs, not necessarily first-time homebuyer programs, and a lot of it depends on the person as we sit down with them and evaluate. But there are some. Say that there is 100% financing on certain properties. We can get in with 103%. It's called a Cal Half a loan. It's 3 loans, so for some people that's really scary. It's a 97% first, a 3% second, and a 2% third. There's no payments on the second, but it's due at the end when you sell the house. So
a soft second.
Yeah, it's a soft second.
So let's say it's a $15,000 loan. When you go to sell or refinance the house, from my understanding,
correct.
You pay back the government or the state
that
$15,000.
Yeah.
Which a lot of people, and I actually had a client who had this. She went through someone she was referred. I met her at an open house. The lender, I guess, didn't really explain it to her. She didn't understand that she had to pay back that second when she went to sell or refi. Right. But I was telling her, like, how long do you plan on being in the house for? Quite a long time. Okay. The program, it's not a way to make you pay back the state or the government. It's a way to actually allow you to buy a house.
Right.
To buy
Instead of paying rent, now you're paying a mortgage.
Yeah, and to not have to pay interest on it, and it's free money, essentially.
It really is.
It's explaining that to people, it's not tough, but it's just trying to help somebody understand they're giving you the money to be able to buy the place, not for you to have to pay them back.
I think because it's out of the box, it's not a norm, people think there's a catch. So as long as the loan officer, myself or Darci, is explaining it to them thoroughly, they know exactly what to anticipate. That's my job. And our initial job when we meet with a client is to give them as much information as we can to help them make a decision. So we'll sit and analyze their situation. Here's this loan, here's loan A, here's loan B, here's loan C. Which one works best for you guys? I mean, you can get in as low as 3.5% down on another type of loan. There's other loans with 5% down. So depending on how much money they have.
And when you say 3.5% and 5%, you're talking about 3.5% is FHA, but there are 3% conventional loans.
Conventional loans,
and 5% conventional.
Yep.
And for some people, they may not understand what that entails, but FHA is a great loan.
Oh, really?
Again, it allows people with little cash or not great FICOs to be able to buy a place.
Yep.
The problem is you're going to be paying mortgage insurance throughout the duration of the loan.
Sure.
The conventional 5%, you'll have the mortgage insurance, but once you hit your 20% equity, you can actually, it's gone. So your payments are going to go down and everything. Or what you could actually do, the lender could get really creative with you. What I personally did on my home loan, I actually took the higher interest rate and incorporated the PMI into that. My payments were lower than with the lower interest rate. And not only that, I get an extra half point worth of write-offs.
Sure.
So for me, it's a no-brainer.
Yeah.
Lower payments, that's all. I don't care.
Yeah.
I just want something
Exactly
to pay as
right.
little as possible.
Some people are so rate sensitive that they wouldn't understand. It wouldn't make sense to them, and that's perfectly fine too. And some people like short-term loans too. I mean, there's 5-year fixed, 7-year fixed, 10-year fixed. There's huge benefits to that in certain situations. There's safety in the 30-year fixed. Hands down, you know exactly what your payment's going to be for the next 30 years. And you know how it is. People say, well, we're planning on moving 3, 4, 5 years. And you know that there are 7 to 10 most of the time. So it's a little longer than the plan. Usually we know how we are when we all make plans. A lot of times
Always.
a lot of times they change. So yeah, it's an analysis of each person's situation. But there's another great loan right now is a VA loan. I tell you what, if you're a veteran and you have a job and you're making okay money, there's no reason you should be paying rent.
Yeah.
The qualifications are so flexible, and there's no money down. And if we work it out right, we've done them before where they come in with $200.
That's crazy.
It's unbelievable.
That's amazing.
The
It
rates
really
are
is.
fantastic.
It's a great benefit that vets get, and they should.
And I've had agents. I mentor new licensees, and I've actually had recently one of them say, "Aren't VA loans really hard to get?" And I said, no way. These are like the easiest loans to do because you know exactly what you're getting. There's not going to be any conditions or overlays.
Right.
You know the rates, the best rate out there.
The best rate out there, yeah.
And they don't have to come in with really any money down.
Yeah, and there's no monthly mortgage insurance.
No.
Like an FHA, VA has no monthly mortgage. They do have what they call an upfront funding fee, which is how they fund those loans. Then they add that to your loan. So it doesn't affect your payment all that much at all.
Even the disabled vets.
Disabled vets, they have no upfront funding fee at all.
That's awesome.
Yeah,
they
so
waive
there's
that.
huge benefit. We did a presentation at the Marine Corps League, the Ronald Reagan Marine Corps League, at their monthly meeting. And what a great bunch of guys, mostly Vietnam vets, it seemed like at that meeting, but what a great bunch of guys. And two of the guys that I spoke to, one of them was in the middle of a transaction. He flipped his transaction to us to do his VA loan.
He was using a regular? He had no idea?
A regular conventional. He didn't think the
didn't
VA made sense because of this and this and this. People that had told him. Maybe the lender he had gone to didn't have a VA loan. So as soon as I presented it to him, it was perfect for him.
He deserved it.
And we're closing on December 18th.
That's awesome.
Yeah.
That's awesome.
Yeah. Just to be able to do that for the vets too, it's awesome. And he's actually has a down payment, but it's still made
his
more
payments
sense
are going to be
because the
even
rate's so
lower.
much better.
Yeah.
And it's a great loan. It's one of the greatest loans out there.
That's
It
awesome.
really is.
Yeah.
That's awesome.
Yeah.
So another thing that just happened. By the way, for people who don't know, Fannie Mae and Freddie Mac. If people think I'm just throwing out random names,
It's not two people.
it's actually it's not two separate. I thought the same thing when I came in. I'm like, who's this Fannie Mae and this Freddie Mac? Is this a couple that
They
you're
know each
talking
other?
about?
That's funny.
Yeah, when do these guys meet? But that's the most home loans are produced by Fannie Mae and Freddie Mac, and they actually just came out with an increase in the loan limits.
They did.
You guys want to talk about that a little bit?
And all that is based on median sales price, as we were talking about prices earlier. They adjust them yearly. The past 3 years, they've gone up significantly. And I'll tell you what the adjustments are and then try to explain how that affects us. The conforming loan limits went from 453 to 484. Okay. The high balance, I'm going to explain what these are, went from 679 to 726 in the LA County and 713 in Ventura County. What that does, it opens the door for more buyers. Conforming loans, the ones now below 484.
And again, when Mark says 484, he means the loan amounts,
not the purchase price.
correct.
Yeah.
So you could put down as much as you need as long as you get
to
the
that number.
484 or less loan amount.
Correct. So 484 and below, normally interest rates are a little bit better than just right above that and that high balance up to the 679 and now 726. So the rates are better on a conforming. So they've opened up that window by $30-some odd thousand to buyers.
That's
to
a
be able
huge
to,
jump, too.
It's a huge jump.
I think it didn't increase quite that much from last year,
It went
right?
from 424 to
So it did go.
453.
Okay, so
and
it
the year
did have a
before
pretty
that
big
was
jump.
417 to
Yeah,
424. So
that
it's very
one I
little.
knew was a little
didn't
more.
do anything. That was the point of that. So this one's huge. It opens up that window.
But still, from 417 to 484 in a matter of 3 years.
Yeah, it's huge.
That's crazy.
That's because prices are going up and
Yeah.
they adjust those accordingly. And so the high balance that now goes, let's use Ventura County since we're in Ventura County right this moment. Ventura County is at 713. That opens the doors for those buyers that might have been a jumbo loan, because jumbo loans, anything over that 713, are a lot harder to qualify for. Lower debt to income ratios, and you need reserves, harder to qualify.
Yeah.
So it brings that, if somebody's coming up with 20% down, they can go to almost 850 and still be in a high balance program, don't have to qualify jumbo with that new increase. So it opens the market up for a lot more people, if that makes sense.
It does. And I think, from my understanding, it affects more of the buyers in like that 500 to 600 range to allow them to actually get a lower interest rate.
Correct. If they can get into that conforming below 484.
Yeah.
Absolutely.
And obviously, that's huge.
Yeah.
To help save as much money as possible.
Yeah.
And to get that lower rate.
Yeah.
I think people will actually, I guess you could say, pull the trigger.
Sure.
The ones who, again, are on the fence back and forth. Do
Yeah.
we do it? Do we wait?
Yeah.
See how the market plays out. And to add on to that, too, I actually like to tell people, here's my opinion, and, talk to your lender to run the numbers. But it's better to buy a home with a little higher purchase price, with a lower interest rate, than it is with a little purchase price with a higher interest rate.
Sure.
You're going to be saving so much more money over time. And long term, obviously it's hard to see. I can't even see myself in 3 months from
Right.
now, let alone
Right.
Yeah.
10 years,
Exactly.
15,
Yeah, what time is
20
it?
Never
years.
know.
Exactly. Yeah, what am I going to do for lunch in 3
Exactly.
hours? I don't even know what I'm going to
Exactly
do for that.
Right.
But to save the money,
Yeah.
it's the better way to go.
Mhm. Yeah,
And
it is.
actually, with the prices, again, we're not going to really see the difference in probably for another couple months or so coming down, but they're able to soften the prices, and the rates are able to stay kind of where they're at.
Well, that'd be beautiful,
It's
wouldn't it?
a
Yeah.
good
a great
time for
market.
buyers.
Yeah,
And
yeah.
actually, the one thing, I don't know if you guys are seeing it on your end because, with the market shifting, how much you're able to see it. But this is a time it's actually allowing buyers to sit and not just write an offer within an hour of seeing a house and throwing buco bucks out of place. They're actually able to sit, think,
Right.
take their
They are.
time,
They have some time.
and
Yeah.
negotiate.
Yeah.
I have one I'm closing next week. The seller started extremely high. They kept dropping it. Eventually, my client got it 23 grand less than what at the
Nice.
time the seller was asking,
Nice.
but they originally started 100 grand more. So essentially,
Oh,
my
wow.
buyer bought it 123,000
Wow.
less than what
Their
the
original
seller
estimate.
was
Yeah.
asking for.
Wow.
Again, the seller started a little
A little too high.
too high,
Right.
but still, even at the
Right.
asking price that they were at by the time we made an offer, they still got it for 23 grand less. And we had time to sit and think about it. We saw a bunch of other things. They took their time, 3-4 days,
Right.
and then we wrote the offer.
Right.
So to see
It-
buyers actually able to just, okay,
Yeah.
we don't have to rush in anything. And I got nothing but respect. When I bought my place, I saw it 3 times.
Right.
And it took me 3 weeks to
Right.
make the decision on it.
And it's more enjoyable for everybody too. They're not running around like chickens with their heads cut off, trying to
Right.
got to sign this, run around, get the offer in before somebody else does. Blah,
Oh
blah,
yeah.
blah.
Oh, and
It
then
gets
you're juggling
crazy.
around. Wait, did this house have the 4-bedroom or did it have the 3-bedroom? Was this the one with
Right,
the upgraded
right.
kitchen or the non-upgraded
Yeah.
kitchen?
Yeah.
So, yeah, it makes a world of difference.
You know what
for
that
buyers
allows
right
for
now.
too, Brad, and you know this, is it gives the lender time to get their loan approved. You know, we can get it done even before the offer's accepted. You know, if we meet with a client,
Do you
absolutely
direct underwriting, written approval?
The direct underwriting, but I'll even go to the next step and have an underwriter actually go through it, so we make sure we have our I's dotted and
So
our
the
T's
only
crossed.
thing you guys
I just need
really
an
need
appraisal.
is the appraisal and the address. And a
Exactly
lot of
right.
lenders don't do
Don't do
that,
that. No,
because
not at all.
for them it's
It's
considered
work.
a risk.
Yeah.
Yeah.
And it's work.
And,
And-
it makes the offer stronger.
Way
Oh,
stronger.
Your buyer's offer.
It's
I mean,
almost
is
as
it-
good as cash.
It is.
Absolutely.
It's almost as
Yeah.
good
We're
as
ready
cash.
to
So
go.
to have a lender like you guys
Mm-hmm.
say, hey, if we got the time, get your stuff in now.
Yeah.
We'll get your DU approval. For me as an agent, like I said, I think that's just as good as cash.
Absolutely.
Yeah.
You know, the only thing is cash offer, you don't need an appraisal. But,
Sure.
you know, like me, I'm not going to let my clients pay ridiculous amounts over
Right.
appraised
Right.
value.
Yeah.
And if it doesn't appraise, you're protected by the appraisal contingency.
Exactly.
Sure.
You go back to the table and renegotiate.
Yeah.
Or, you know, you say, hey, we'll go find something else,
Yeah.
but they get their deposit back.
Yeah.
So that's all it really is. Appreciate you guys coming on.
Thanks,
with me.
Brad.
Thanks,
It
Brad.
was
Yeah,
fun,
it's
Brad.
great.
Thank you. I appreciate
Yeah,
it. Got
you
us out of
guys-
the rain too.
Yeah, well, I know you said you didn't quite understand what the podcast really was.
Oh, don't age me like that.
No, Darci was hoping to come in sweatpants and pajamas.
Yeah, I didn't
today,
know. I
so
couldn't
she
have
got
to
all
get
dressed up for us.
here.
But I appreciate you doing that.
Yeah.
Thank you so much.
Thanks,
It's so
Brad.
good to be here,
So,
Brad.
no, you guys are very welcome. I love you guys, so I appreciate you coming in.
Thank you.
Real quick, I do want to pitch a couple of listings I have. I still have that one for sale at 1826 Winterdew Avenue. She's asking $819. It's a 4-bedroom, 3-bath, 2-story off of Tierra Rajada in West Simi. No HOAs. This is a house built in 1998, which, I mean,
Yeah.
how many homes
No
built in
HOA.
that time
Yeah.
out here?
That's huge.
I guess anywhere does not have HOA.
Not an
Yeah,
HOA, yeah.
that's good.
There's no neighbor across the street. You
Wow.
have views of the hill, and actually on the other side of the hill is the Ronald Reagan Library. But you don't hear the
Nice.
traffic, you don't see any of it. Completely secluded. Pool, possible RV access, completely upgraded throughout the entire downstairs with hardwood floors. Kitchen's redone, high ceilings, recessed lighting. The master bathroom's been completely remodeled. It's a beautiful house.
Sounds wonderful.
It's a beautiful house. So if you're looking for something like that, give me a call. Like I said, $819 was the asking price. And then the other one I have for sale is 2536 East Alden Street. Again, this is also in Simi. This is actually Central Simi Valley. And we just reduced the price the other day to $599.9. It's 4 bedrooms, 2 baths, 1,926 square feet. So for a 4-bedroom home at that price,
It's a great price.
It's a great price.
Yeah.
pretty
Four
good.
bedrooms, yeah.
It's pretty good. You don't get many homes with, and they're good sized bedrooms. The seller's been there for a little over 15 years. Every single thing that's been remodeled, it's from him. Not saying he actually did the work, but he's the one who came up with the idea. Hey, let's redo the kitchen. Let's redo the floors. Let's scrape the ceilings. Let's put the recess. The garage is completely redone.
Nice.
Absolutely beautiful. I'm going to be holding it open this Sunday. Oh, I think that's the 9th. Yeah, December 9th from 1 to 4 if anybody wants to come through. Again, beautifully remodeled Central Simi, very affordable for anyone who's looking at that price point. Again, thank you guys for coming on.
Yeah,
It's a lot of
thanks,
fun.
Brad.
Thank you.
And if you guys want to come back, you're more than welcome to. We could talk
love to.
about mortgages. We could talk about anything you
Talk
guys
about-
wanted. That's the
Talk
best
about
part.
lunch,
That's the best part of this.
Darci won't have to dress up.
I
Yeah.
always do.
No. Next time, well, hopefully I have video. We could do video on
Yeah, we'll do
this.
a video.
And I'll make sure.
This is a lot of fun. I
Yeah,
appreciate it.
it is.
No, thank you
Great.
guys for
Really
coming.
enjoyed
So
it.
everybody, I'll talk to you guys in a few weeks, and thank you for listening. Take care.